All right, finished my workout. I think I'll check out the pre-market. Oh man, that was good. Oh, so refreshing. Oh, I'm looking so strong, so swole. Ooh, feel good. Yeah, well, pre-market's looking all right. All right, 9:30. Opening bell, one of my favorite times. Let's take a look at the market, SPY, QQQ. Let's see how things are going. Ooh, hey, yeah, all right. That's looking good to me. I like that green. Soup is free. Oh, come on! Oh, crap. Okay, seriously though, the market today is crazy. Pre-market, we had a little bit of green, and then market open went a little bit greener, and then oh my gosh, did it really take off? The NASDAQ went up over 2.5%. I'm gonna have to take a look at the exact numbers and looking at QQQ to see, did we break resistance or not? Is it something that is really, are we at a turning point? Is this going to continue? We're going to discuss that in this video. Also, we're going to take a look at SPY following the S&P 500, and we'll see what happened there. Did we break resistance there? Are we on to the next bull run, or is this something that's going to be just another passing moment for us, a bull market rally in the middle of an overall bear market? So stick around. I'm Dr. Stock, Doctor of Education. Let's get right into it. The chart that we're currently looking at is QQQ, and you can see the resistance line that I have drawn in here. That was from yesterday when I recorded my video. It was a very late night for me last night. And then today, if I can zoom in on this green candle here, here's today's market. And you can see, if we look at the high for this one, we went all the way up to 290 before pulling back to 287. So we lost about 1% from the peak. The market is still ongoing. There's about an hour left. We'll see if we sell off into the close, but that candle opened above resistance and right now is still well above resistance. However, if we zoom back out, if we really want to consider this some sort of reversal, now we have a really nice double, maybe even triple bottom going on here, but really breaking these previous highs is something that we want to see. Also breaking above the 200-day simple moving average could be really, really good for the NASDAQ. These two horizontal lines, just to address them, these are the area of support that we have for the NASDAQ. If we do tumble back down, I think that we have some pretty sturdy resistance here, and I'll zoom out even more. And we will look a little bit to the left. There we go. And you can see that area of support over here being confirmed all the way, looking back left, all the way back to September of 2020 when we had those rough times prior to the election. So let's go from there over to the SPY. In yesterday's video, I mentioned when we were looking at the SPY that we have a death cross back here. And also at the very peak, there we go, we can see that line of resistance. And we peekabooed over the top with this red candle right here. Oh my gosh, my computer is getting away from me here. There we go. So we peekabooed over the top of this line of resistance, and we are nearing a golden cross here where the 50-day simple moving average crosses the 200-day simple moving average. And you can see with today's action that we did peekaboo again up above before pulling back about to our resistances. So we'll have to see if we sell off into the close. Unfortunately, it won't make it into this video, but it will be interesting to see. Let's go ahead and take a look intraday. Let's use the 30-minute chart and see where that puts us. Wow. Capping off at about 402 and then dropping sharply from there. Certainly people capitalizing on those gains. It looked like we had a bull pennant shaping up and then failing to break that. And when you look intraday, it certainly looks like something that is going to keep going for us. However, when we go back out to the daily chart, you can see that line of resistance that we're currently still sort of dancing around is really giving us trouble for the moment. And the SPY is even better looking than the NASDAQ when we take a look at this. So yeah, we have that line of resistance. However, we did not return back to this lowest low that we had. And well, that can be a very good sign for us. Now we are squeezing up on that line of resistance. We do have the overall trend of the bear trend. We are not out of the woods yet as far as recession goes, as far as inflation goes, as far as what the FOMC is going to do. Is the Fed going to hike rates on us? I don't think that this market is going to get frothy enough in time to change the minds of that 25 basis points. We have enough economic reports coming out that I don't think are going to tell a different story than we already have at the end of this week. for the FOMC to change their minds. I think that near 100% certainty, if there is such a thing, of a 25% basis point hike that we have coming February 1st, I think the market already priced that in. I think people are actually pretty happy with the state of things. Consumer sentiment will come out to back that up, that it is the highest reading that we've had since, I think it was April of 2021. I'd have to go back. It's April, but I don't remember if it was this year or last year when we look at the consumer sentiment survey. So PCE, which comes out with personal income and outlays, we'll see if people are becoming more conservative with their cash and their discretionary income. We'll see how much they're spending according to the PCE to see for the personal consumption index and also core PCE to see if that's in agreement with what we had with the CPI, that we have energy kind of pulling back for December PCE wise for December 2022. To see if energy has dragged that down as it most likely should. And then also when we look at the core PCE coming in at 0.3 would be about right. 0.2 would be a little bit better. 0.1 would be astounding. That's what we're looking for. We don't want too low of a read, and I don't think that we're going to get one. We can. It is possible with, we also have housing information coming up, housing reports coming up with new homes, and we don't want so much of a slowdown that we signal deep recession, because that's really going to take the wind out of our sails for this little bit of a rally that we're seeing right now. If we're going to see clearly breaking not only that diagonal line of resistance, but also overcoming the previous highs that we have, I think is going to be an even stronger indicant that we have some serious upward movement taking place. We can't have news that says that the recession is here, it's deeper than we thought, it's going to last longer than we thought. So we're going to have to watch those reports come out and make sure that they're still giving us status quo, that it's like hey, things are slowing down, but they're slowing down only a little bit. You know, while recession's still bad, we don't want something like we had back in 2008 with the housing market crisis, or with the dot-com crisis that we had. Those would be absolutely horrendous for us and for the economy and for the people losing jobs. Hopefully we get that soft landing, that Goldilocks case that the Fed is looking for, where inflation continues to moderate, and we'll see as the rest of the world, it looks like across other foreign markets, that they're recovering a little bit better than they thought they would have, and we'll see how that inflation plays out for them over time. I'm not as well versed in foreign markets. I mostly focus on U.S. markets, but I am bringing in more of a global perspective as I start to develop my own, or as I continue to develop my own here within the United States. So moving on from there, so inflation moderating, good thing. Recession, how hard are we pulling back? Are consumers really slowing down their spending, or are consumers still strong? Is the job market still strong, which we do get jobs data coming up on this Thursday as well? I think that this is going to be a very nice, healthy week for us up to Wednesday. And then come Thursday and Friday, you know, it's anybody's guess as those earnings come out. Microsoft is going to be a big one. Tesla is going to be a big one. Those are definitely ones to watch. You know, are they going to let this party keep rolling, or is it going to be something that's going to, you know, put a big red day, you know, as I put my video yesterday for the thumbnail, that this was going to be a volatile week. And, you know, today the market's going up as much as they have, going up over 1% in the NASDAQ and also in the S&P 500, I think is good for us that we see that volatility to the upside. However, it makes it hard to rely on anything. So that also means that we can see volatility to the downside as well. And I'm hoping that we end this week green. I would absolutely love to see a strong finish to January going into February. We don't want markets to explode to the point where the Fed decides to do another rate hike in March, which is still, I think, about a 35-ish% chance of that 25 basis point rate hike in March. That would be March, I think, 21st and 22nd. I have to double check that date. What would be nice is if the markets continue to moderate, that the Fed watch the reports come in, and the reports say we do see an economic slowdown, we do see inflation moderating, and, you know, allow the Fed to be like, you know what, maybe it is time to pause. And I know that that's a dangerous thing for them to say, so hopefully they can just shake their fist and, you know, say a bunch of words in a very serious tone to give the impression that they're serious and that they mean business and they will continue to crush this market and this economy if they have to. Well, let's hope that they don't get back into that hawkish scenario, because that's something that can really, really push things down and really put us in a bigger threat of recession, stronger than what we're already seeing in the markets and what's already being predicted. So let's hope that it's something where we don't get overhyped in the markets, that we don't see consumers take off too much where inflation is concerned as we get into January, February. Right now, slowdowns are anticipated, and recession is something that is also anticipated. So as we get into January and February, we want to see that inflation is moderating. We want to see that the economy is slowing a little bit. We want a slowdown in GDP. We don't want negative GDP. So hopefully we can avoid the negative GDP, because that would be something that would be recessionary for us. And well, if we can avoid that, that's better for everybody. We don't want things to get so hot that the Fed becomes hawkish, because they feel as though they need to, again, take action to enforce their dual mandate, maximum employment, and stable prices. So we'll watch for that to happen in the market coming up. Remember, Thursday and Friday are both important days for the economic reports that we have coming out, the PCE information that we have, GDP, we have housing information, we have employment information. I know that I'm forgetting stuff off the top of my head here, but and I do have some more research to share with you guys, and I'll put that in my next video. But that's definitely stuff that you want to pay attention to. We do have room for green lights between now and Wednesday. Hopefully we finish out January strong. This is the last trading week in January. Next week begins our first week into February, even though it's the true end of January. But then by February 1st, we have the FOMC meeting, and I hope that we get exactly what we're expecting, which is that 25 basis point hike. If the Fed decides to pause, which I think is very, very super unlikely, and so does all the other research out there, says that it's unlikely to get that pause. That would be that would be incredible. Wednesday, February 1st would just be an absolutely off the hook insane day. If you guys want to support the things that I do here, check out the links that are down in the description. I'd very much appreciate that. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.